Hi there, welcome to Kneppy Invest and welcome to my pursuit of high quality companies that are not on the ASX. Today you have a company listed on the NASDAQ called Lululemon. Who's heard of this company? I'll put my hand up. I have never gone into one of their stores. Maybe I should, because this company sells athletic gear, I think, something like that anyway. But I've never gone into a Lululemon store. That doesn't mean that this is not a worthy investment. Now, I did see I did see at either a podcast or an article that I did not read or listen to that was titled, "Is Lululemon really cheap or a value trap?" And then I deleted it without reading it or listening to it. And now I'm wishing I actually did listen to it or read the article. I have no idea where it was. This was early this morning. And then I'm doing a video on Lululemon. There you go. So just a bit of bad timing there. Anyway, so what I'm going to do in this particular video is we'll have a brief look at what Lululemon does, which I've already told you. And then we'll have a look at the financial history of this company. And then maybe we can determine if this company is really good value or really cheap or a value trap. Now, it's really hard to know if a company is a value trap, particularly if a company is high quality. And the reason I would say Lululemon is high quality right now is because this company did satisfy my high quality filter, which is the rule of 10. So this company has experienced 5-year revenue growth above 10% per year. Return on invested capital 5-year average has been above 10%. And the operating margins 5-year average has been above 10%. And this company has a market cap above $100 million. And it's not a mining company. And it satisfied my filter, along with 94 companies listed on the NASDAQ, including Meta, Broadcom, Tesla, Netflix, Nvidia, Microsoft, Adobe, AppLovin, which I did a video on that yesterday, and many more, including Marriott International, Monster Beverage, Autodesk, and Fortinet. Now, I'm recording this video on the 19th of August, 2025, more than likely releasing this video sometime in October. So when I do have a look at the chart, it might look a little bit different. Maybe the share price has bounced significantly. Okay, so let's have a look at Lululemon Athletica. So that's their name, Athletica. There you go. Designs, distributes, and retails athletic apparel and accessories for women and men. So I'm glad it's included men there. So maybe I'm more likely to go into one of their stores. I had no idea this company was selling athletic stuff. I just thought it was just normal stuff. Anyway, so let's just have a quick look. Founded in 1998 by Calvin R. McDonald. Okay, so let's have a look at why this company is high quality, just based off its financial metrics. It's as simple as that. So for instance, revenue growth. We're talking about really good revenue growth over the last 3, 5, and 10 years. In fact, over the last 5 years, 22.8% increase in revenue per year. This is CAGR. Earnings per share growth at 27.3%. In fact, earnings have been growing at a greater rate than 22% over the last 3, 5, and 10 years. So straight away, these are the sort of things that would really highlight to me that this is a possible high quality company, just the revenue and earnings per share growth. But there's a little bit more than that. I like to have a look at margins. Gross margins at 59.3% and 23.4%. That's in the last year. I do prefer to look at the 5-year history. And we'll have a look at that in a second, because what's even more important is the trend in margins. Are margins going up, going down, going sideways? Now, if we see margins going down, that could be a negative sign. Could be a sign that there's a bit of competitive pressures on this company. Maybe this company is more of a trend stock. Maybe their clothes are trendy and the trend is coming to an end. It does look like they've got is that the Under Armour symbol? Maybe not. I don't know. Next thing I look at is return on equity, return on invested capital, 5-year average, 38.1% for return on equity, 35.4% for return on invested capital. Nice. 2 thumbs up. Oh, a couple of claps there. Don't really care about dividend. In fact, it says here it has no dividend. Now on to debt. A little bit of debt, not a lot of debt. Debt to equity is at 0.4, but net debt 381 million for a company with a market cap of 37 billion. That's not too high. Now, the first thing that has really jumped out to me is the P ratio, 13.5. Now, just because of 13.5 doesn't necessarily mean this company is cheap, because possibly over the last 10 years, the P ratio of this company has been below 10, which might mean P ratio 13.5 translates to this company being expensive, not cheap. But I have a feeling that 13.5 is on the low end when you look at the P ratio history of this company. Forward-looking P ratio is at 13.5. Okay. Now, what I'm going to do now is I'm just going to have a quick look at the investor relations. So they did release. I'll have a look at their results in the last quarter after I finish recording this video. You can just see it's taking ages to open up. There we go. Revenue up 7%, earnings per share up 2%, total comparable sales up 1%. Maybe a bit of a slowdown in growth we've seen the last quarter, but that does not necessarily mean anything's going badly. For some reason, they have a power of 3, whatever that means. Looks like the apparel is they're all up about 7 or 8%. So it looks like there is a bit of a margin contraction just based off the difference in growth in revenue compared to earnings. So that's something to have a look at in a second or so. Now, when I have a look at the financial history of the company, I just want to have a look to make sure there is a bit of growth. But what I've included here is I'm going to include revenue, income, and then margins, gross profit margins and operating margins. I'm going to make the last two invisible. So all we're focusing on now is revenue and income growth. And what I want to say here is, what I would also do is get rid of the last 12 months. I just want to have a look at the last numbers. We also might have a look at the quarterly numbers as well. Really, the thing that stands out here for Lululemon is the growth in revenue over the last 10 years. In fact, revenue has gone up 5-fold. That's nice. That's nice. Maybe revenue is starting to slow down, but it's still growing. In fact, it's gone up every single year. That's fantastic. And in fact, profit hasn't gone up every single year. In fact, on occasion, you will see the profit drop, but then the next year it climbs again. And profit, in fact, has gone up 9-fold over the last 10 years. So that is telling me straight away that possibly the margins have increased over the last 10 years. Maybe margins have decreased in the last year. Okay, so revenue up 19.9% over the last 10 years, 23.7% over the last 23.74% growth in income or profit over the last 10 years. Okay, that's not the end of the story. Now, sometimes I will have a look at cash flow. I always like to have a look at cash flow just to see if there's any big differences here. So this is the operating cash flow and free cash flow. And again, with free cash flow, you can see there was 1 year, 2023, where free cash flow just dropped. There's a big drop and then it rose significantly in the next year. And so when we look at some of the free cash flow valuation metrics, it may not be as clear just because of that one big dip. And there was also a bit of a dip in operating cash flow that year as well. Okay, so next thing I want to look at is we'll have a look at return on equity and return on invested capital. I just want to see if these are going up or down over the last 5-10 years. Okay, so we always want to look. No, we can look at these together. Okay, so not really any change. So no real change. In fact, return on invested capital, I suppose, if you compared 10 years ago to now, it's gone down a little bit, but really, we'll say about 40%. As high as 54.4%, as low as 26.2%, but really going sideways. Return equity, you could actually say that has been increasing over time. So maybe a slight increase in return equity over the last 10 years. But the thing I didn't want to see, I don't see when it comes to this company. We're not seeing these two quality metrics dropping. That could be a good sign. The next thing I want to look at is valuation. Actually, before we have a look at that, I just want to have a look at quarterly numbers. Just want to see if there's been a bit of a slowdown in. Well, there's definitely some cyclicality here. So it looks like that December quarter is by far the best quarter, which makes sense. But even if you have a look at, or when you have a look at the quarterly numbers here, everything is increasing. So exactly what we want to see. Okay, so last thing I'm going to do is have a look at. We'll have a look at valuation metrics. We have to decide which ones to look at. What I'll do is we'll have a look at price to sales, P ratio, free cash flow yield, although maybe not, EV to EBIT, and EV to free cash flow. We'll start off with looking at the PE ratio. So we'll make some of these invisible, because if you put them all on one graph, it's going to look fairly wild. So this is PE ratio of Lululemon over the last 10 years. So currently, in fact, what we're going to do is make one slight change, go to the last 12 months, because if you don't do that, the PE ratio or these valuation metrics just go out to the end of last financial year. So we want to see the updated numbers. And that's very important for this one, because right now the PE ratio of Lululemon is 13.8. Now, again, this is on the 19th of August. Now, if the share price has popped up a fair bit, it could be a little bit higher. But over the last 10 years, that is the lowest this particular valuation metric has been. Now, last time it was sort of low, maybe you could say about a year ago, 18.7. And then if you go back to 2017, PE ratio really didn't get below 20, 22. So even during COVID-19, PE ratio was 28.2. So definitely this could be an argument. This company is good value. Now, is this because of financial contraction? No, not really. So more than likely, the share price has dropped a fair bit recently, well, over the last year or so. Okay, so that's a PE ratio. Definitely a possibility the company is cheap. What about price of sales? Let's have a look. Do we get the same sort of signal? Yeah, same signal. Lowest it's been at 2.27. So yeah, same signal as a PE ratio. Free cash flow yield, we want this to be high. I mean, it is high. It's at 5.4% and historically high as well. Historically high. It's been as high as 6%, and that's where it is now. As low as a few percent, but some of these lows during that period where we did see a bit of a drop in free cash flow. Was that 2022? Yeah, so that's, just ignore that. What else? I would assume EV to free cash flow has the same signal. And then you get this massive spike. So again, this is reverse of free cash flow yield. Because of that really low free cash flow yield, really low free cash flow year in 2022. That's why you see this massive spike. But if you sort of ignore that, it's still on the low end. Still low end at 17.39. And finally, just EV to EBIT. I have a feeling we're going to see the same signal. Oh, what's happened? What's happened? Oh, I'm going to click on it. I thought I clicked on it. Yep, same signal. So we're getting all these signals that there is potential that Lululemon is good value now, or maybe it's a value trap, as that podcast or article mentioned. In fact, I'm going to try to find that now. Okay, so this is the weekly chart for Lululemon. It goes back to 2017. We'll go back even further than that. So it looks like this company listed in 2007. Yep, 2007. And between 2007 and about 2017, on occasion, you did see the share price drop below the 200-week moving average. I suppose that was good buying. You can see the share price, well, maybe you can't. Share price bounced off the 200-week moving average during COVID-19 and went on a nice little rally. It tried to bounce off it quite a few times during 2022. And in fact, the share price has been significantly below the 200-week moving average over the past year and a half. So right now, the share price is at a 5-year low. Okay, so share price or the chart is suggesting that there is potential that this company or the scenario this company is facing may not be as simple as share price bouncing off the 200-week moving average, or this company is really cheap. Maybe the market is a little bit more skeptical about the growth prospects of Lululemon moving forward, because this chart is starting to look pretty negative and we're not really seeing a bounce. In fact, you could even say the 200-week moving average is now acting as resistance. We saw the share price get up to that level and bounce or move further lower. Let's have a look at the daily chart. And if they released their results on the 6th of June, I don't think they would have. Share price down 19.8% on the day. And this daily chart looks pretty ugly as well. So the question becomes, is Lululemon Athletica a high quality company? If it is, maybe now is a good time to buy because it does look cheap. So it's a good question. Is it cheap or a value trap? I'm really going to find that podcast or article. Oh, I like this to be answered. Anyway, that's all I have for this look at this company, Lululemon. High quality company that's looking interesting, cheap. Maybe I should say a possible high quality company, but it does satisfy all my filters. So it just shows you that just looking at filters or looking at a screener isn't the whole question. doesn't really answer the ultimate question, because if this company is high quality, it looks really cheap right now. So I'm really focusing on that if this company is high quality. Okay, if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.